Hey everyone, welcome back to Alpha Insights. I'm Kristen, and today we've got a compact story about a photonics company trying to move from lab demos to real products. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
And I'm Ryan. Good to be here. This one mixes cutting-edge hardware and classic commercialization risk. So it's a fun one to unpack.
So, quick framing. The company makes integrated photonic engines and hybrid lasers aimed at high-bandwidth data center and AI interconnects. They've been doing demos at industry shows and say commercialization is starting. But the numbers tell a different part of the story.
Exactly. The market has priced a growth story into the stock. Market value sits around $1.04 billion. But revenue today is tiny and losses continue. Analysts are watching for real revenue signals, not just demos. Right.
Let's break it down. What makes their tech interesting is the hybrid approach, combining 3-5 lasers with silicon photonics to create compact, higher power light sources. That can matter a lot for hyperscale data centers trying to cram more bandwidth into smaller, cooler packages.
And to add to that, the company has a family of optical engines they call Blazar, plus multi-channel hybrid lasers. Those prototypes shorten evaluation cycles versus pure R&D players, at least in theory. But theory versus mass production is the million-dollar, well, not literally, question.
Yeah, that's a good point.
Honestly, I was a bit surprised by the level of media attention earlier this month after their conference demos. It created intraday volume spikes and chatter about large block trades, which pushed volatility up.
But volatility doesn't pay the bills. Financially, revenue is still in the low single-digit millions at best over the trailing year. Operating losses are ongoing, and cash on the balance sheet is in the low tens of millions. The current ratio is roughly 2.3, so near-term liquidity looks manageable. But scaling production usually needs more cash or real revenue.
Yep, runway exists for early qualification runs, but sustained commercialization will depend on converting demos into paid orders. Analyst consensus pricing is interesting too. Mean price targets are roughly $6.93, which implies only limited upside from current trading levels around $6.83. There are a few big catalysts to watch. One is the upcoming quarter-end results later this month after the market. Management tends to talk about qualification progress and order activity rather than giving firm revenue guidance. Then there's the next quarterly update in mid-May, which could either confirm a sales ramp or raise more questions.
And the community will be looking for 3 concrete things in those reports: order intake, customer qualification milestones, and any signs of margin improvement or unit cost gains as they scale.
Short reactions. Independent customer quotes or a recognizable hyperscaler as a reference customer would be huge catalysts. Absent that, the market may keep treating the stock as speculative.
Interesting.
Competitive landscape matters too. There are incumbents with scale, established optical component makers and laser specialists who could pressure pricing or out-qualify a smaller player on supply chain reliability. So execution timing is everything.
Totally. The bull case is straightforward: fast qualifications, early production orders, and strong demand for dense, energy-efficient interconnects for AI could re-rate the equity. The bear case is equally straightforward: long qualification cycles, tougher unit economics, or capital needs could compress multiples quickly.
Analysts are split but skew optimistic. There are a number of buy or strong buy opinions, yet price target revisions have been modest because everyone knows the revenue proof has to show up. So sentiment is hopeful, not certain.
So what should listeners watch this week and next? Aside from the earnings cadence, Watch option activity and large block trades for signs of institutional positioning, plus any technical follow-ups from the optics demos that include independent performance data or customer endorsements.
And remember, implied volatility around earnings can spike, which creates both risk and potential setups for experienced traders. But again, that's trading tactics, not advice.
Quick recap. 3 takeaways.
1. The technology has real potential for AI and hyperscale interconnects because of hybrid integration. But potential is not the same as revenue.
2. Financials show small revenue, ongoing losses, and limited but present cash runway. Execution on customer qualifications and production ramp is the gating factor.
3. Market pricing already bakes in growth. Analysts' average targets imply limited upside absent clear commercialization milestones. So watch earnings commentary closely.
All right, final note. We're not giving investment advice here. Analysts note the upside and the risk, and the data suggests that the next few quarters will be decisive in either validating the story or keeping it speculative.
Totally. And to wrap up, got questions? We'd love to hear from you. Head over to stockalpha.ai where you can ask us anything and we'll answer live. And while you're there, check out more market content.